Hey there, traders. This is Christian Fromertz, Tribeca Trade Group, with your end of day recap for Thursday. And markets had a little bit of volatility this morning, and we're looking at the S&P chart for the day. We've been kind of hanging above, moving very, very, very much in a tight range. And we kind of came down to the 20 period exponential moving average on my chart, which is the blue line. But we held in here pretty tight, and we bounced off some nice support today to only finish down 19 basis points in the S&P. So really, not much has changed. You look at the range that we've been in and the type of moves. So nice to have a little bit of volatility and kind of something to kind of something to kind of see on, or something to kind of buy on the lows today. And I'll kind of talk about how that progressed. But again, looking at the range of the S&P down 20 basis points, we've got one day here, one day someplace up 39 basis points. If not for that, we've been trading like under 30 basis points a day now. I'm going all the way back to that first election day after the French election. Since then, it's been like up or down 20 basis points, even less than that, for the majority of the days. So, you just have to kind of sit tight and kind of pick your spots. Don't get over your skis with positions right now because, where you want to be really aggressive is when the market is moving, but we're not really doing that right now. So we have been in my trading room. We've been participating in plays when things get a little bit cheaper. We've kind of been adding to positions when they go down just a little bit, and have been doing really well. So by doing that strategy and just taking on a little bit smaller positions, and not going in all in the first time that you go into a position. Kind of picking around. Today I started a couple of positions, and then if we get a little bit of volatility tomorrow, I'll add to them. So that's kind of been my winning strategy for the last couple weeks. I went into some Lulu calls today, and it's not going to be in this market that every time you get in on the first shot, it's going to be the right time. So, I've really had that, especially with either stocks or in sectors that are trending up, but are just coming in a little bit. You don't want to be doing that. You don't want to be adding to positions when names that are in downtrends, but names that are in uptrends, and where you can get basically better fills. I talked about that with Chipotle yesterday. Somebody was asking in the trading room about, asked me how I'm trading Chipotle, and I think the first trade I put on was like here, and then here, and then here, and then I've been making profits on it in Chipotle. So that's been the winning strategy. If you put all on right away, in the market, we finally do get a little bit of volatility, you're going to be sunk. So adding to spots, positions that are in uptrends as they find support, has been a really good formula. So anyway, I want to talk a little bit about the technicals. It's been like basically a textbook with how they've been trading on the value areas. This was on the 1 hour chart for S&P today. This was earlier in the week. We found some support. We didn't really rally too far outside of that. Where did we find support? So today we did break through the value area very quickly today, but we got a hammer bar right on the bottom of value. And when you go to the 5 minute bar on S&P, where did we rally up to from the lows? We rallied right into resistance. So if you could go into the 5 minute chart and looking at our indicator, you could see that we broke and then we rallied back, which is really nice. But note, we didn't want to get too far ahead of us. The market didn't want to get too far ahead of itself and pause twice. Did not want to get into the value area for the day. So same thing with small caps. You look at small caps which underperformed today. You go to the 1 hour bar. Just notice where they are first of all on the daily chart. We did not break in. We did break into the value for the month of May, but we held. So we're still above value for the month. On the hourly bar, even more revealing, very similar to what we did today with S&P. We found support right at the bottom of value. We can break these things, but you want to reclaim them sooner than later. So back to chopping around a bit, and they kind of closed a little bit weak from the bounce that we got. Again, yesterday, they got all the way up to resistance and failed. So we're still kind of chopping around like a pinball machine. And we did take advantage of this when, in the beginning of the week, one of the trades that we put on was we sold an iron condor in the small caps. We did this by selling a call spread up here and a put spread down here. Trade's working out beautifully. So far, so good for that one. All right, so individual names, I really haven't been playing any of the FANG stocks. I think they're mostly overbought. I mentioned this yesterday. I thought that the Nasdaq got, again, support right at the top of value, by the way. But I thought the Nasdaq just got a little bit too heated. It still is. It's still above 70 RSI, so it really hasn't broken down. I was hoping that this thing actually, Nasdaq actually comes in and meets the 20-period exponential moving average, but not yet. And I think that'll be good because you look at Amazon, and which I do have a small position on in Amazon, but I would rather add to the position if it comes in a little bit. Like I said, with kind of how I've been trading, where you start a position, and then if you get a little volatility, you add to it. So we haven't had that yet. Google has kind of paused after getting extremely overbought. Actually, Google ended up today, but really, I mean, look at how narrow or how small these ranges. I just don't think there's much to trade yet for these, and I think we want to see a little bit of a move down further for some of the FANG stocks. So that's why I'm kind of concentrating on some other areas of the market and watching some trades. So we hit a real nice winner. I had a video out on PPC earlier. If you didn't, that was basically the trade of the day. This was a chart that I've been watching, and I've mentioned how we do homework at Tribeca Trade Group. We were watching the breakout of some of these, sorry to say, but chicken stocks. I review a recent high list just about daily to kind of pick up on these trends. So, this thing kind of came in pretty decently over the last 2 weeks. And when I saw PPC calls went up, I didn't really hesitate, and these went up in a bunch of different blocks. Oops, PPC. And all in all, they traded 23,000 contracts, which is not only the original buyer, but a bunch of people like me who are tagging on to the trade. But you could see they went in several times, like, and trying to fly under the radar. Usually when somebody does this, when they buy 500, 400, 499, 300, they're trying to establish a position, and they're trying to do it without anybody noticing that they're doing it, because everybody's looks for big prints. Everybody looks for 1,000 blocks. So when you start to see somebody buy less than 500 contracts, they're trying to do it pretty sneaky, in my opinion. So that was probably the best trade of the day. We also caught a nice winner with CSX. CSX, we've seen call buying, repeat call buying, maybe about a week or two ago, but again, not a nice, bigger candle than a lot of the FANG stocks. Again, I think letting those FANG stocks kind of come in a little bit, and then kind of regrouping. These things come in waves and they go in cycles. So the FANG stocks aren't always going to be every day the hottest thing in the world. So I'm kind of really not paying attention to them as much, because I think there's other things to trade. There's certainly other names. Lulu, which really has been moving to the upside. There was a nice call buyer in that name, so I started a position in that. Besides that, real nice BABA. We played this in the trading room today. BABA, which has been really, really strong lately, but real nice weakness. This is where the buyer came into. So a nice scalping trade today. Nice to see that, and that was basically the strategy for the day. Was, the beginning of the day, when you normally have a volatile first hour of the day, you kind of sit on your hands a little bit, take a look at various different indicators, and when the VIX is ramping up, I don't really want to be adding to positions. Once it slows down and started to do this, then I started to look, and that's when we started to see the call buyers start to come in. So I usually wait once there's the volatility in that first first hour of the day. I kind of watch the tape a little bit and start to say, hey, are people buying puts now, or are they starting to buy calls and pick their spots? We certainly didn't see why I didn't really press anything to the short side, was because we didn't see any put buyers in the first hour. We just really didn't see any of those aggressive players come in to press the market to the downside. We really didn't see for the first half hour any call buying either. We started to see that call buying once the VIX started to back off a little bit, and then we started to see buyers. So BABA was one of those. There was some some GE calls. I did not even look to take that trade. I don't like the chart in GE. Zynga, I actually bought a little bit of common stock in this thing. It looks interesting to me on a long-term chart, which I'm not going to review right now. And then VRX, the best strategy for, I think anyway, for trading this name, which is well under the 200-day moving average, is pick a spot. Pick something that you have reference to. So if you go to a 6-month chart, you've got the yellow line is the 200-day moving averages, which you can't really, if you want to play this thing, you can't just sit on your hands and wait for it to get above the 200-day moving average. Use want to either use the 50, use the 100-day moving average, and say, hey, I'm going to go long, and my stop, as long as you're defining a level. I think it's fine because you got basically 1380 to $17 before we get to the 200-day moving average. Maybe this thing rallies up to the 200-day moving average and stops. So you'd be left out of a huge gainer if you wait for the 200-day moving average. So I actually like right here, maybe going long VRX and then having your stop and being very disciplined and saying, hey, if it breaks the 100, get out, run for the hills. But you could see this volume here. You could tell something's going on in the name. So always try to, before you establish a position, always establish your stop. Hey, where am I going to get out of the trade if it's not going to work? So we saw just a ton of VRX calls the last couple days. A little buying in Match.com. Match had a weak quarter, but has really gotten over it very quickly. I remember listening to or looking at the numbers on the report, and it's kind of been ignored. So you back this up from when this thing first got public, first went public, Match.com, and you can see it's basically at a high right now. So keep an eye on this name. There was a call buyer who came in twice today in that name. Then on the ETF side, a couple interesting trades. We did go long gold miners right off the start with gold up this morning, and quick scalp in and out of that trade for, I think I went in for 47, got out at like 63 cents. So nice trade in that. A couple other trades to note here on the ETF side. Big nice trade in AMJ. AMJ is an MLP ETN. It's not an ETF, it's an ETN. So if you don't like AMJ, because you will have to file a K1 if you get into the stock, you could actually do AMLP. But you look at the chart in for the MLP. By the way, these are things like MLPs are things like ETE, EPD. What's the other one? KMI. So you're probably familiar with some of the tickers, but maybe not the ETFs themselves. But if you look at AMLP, not a horrible looking chart in terms of the 5-year. You could basically look at that 200-day moving average and say, hey, I'll go long versus the 200. So I did not put on anything here, but just kind of watching it. I don't like I don't like when the 50-day crosses below the 100. So I think that was why I did not take that trade, but certainly a sizable trade going out to January. And a little bit of put buying in a couple of the sector ETFs, XLK and KRE. So that's it for today. Tomorrow you have retail sales. Keep in mind, I thought it was funny about how much retail had rallied going into, without having any data. And I sent a tweet out about that last night. All of this buying or this, I don't know, maybe it's short covering that happened the last couple weeks in the XRT ETF with basically no data, with no earnings from anybody, department stores or specialty stores. And then you finally had a couple of the names. And at one point, XRT was down 3% today. So, I didn't buy into that rally. I believe a lot of it was short covering into a lot of earnings reports. Again, today was a big day for retail. Also, next week is a big day, and then you get retail sales tomorrow. So keep an eye on some of these names for tomorrow. Nordstrom's report after the close, they missed a little bit in terms of their comp sales, but they weren't down too much after being after already going down from the Macy's report this morning. But I think you always want to be aware of names that move without any data points, without any information. So I was very cautious on the move the last couple days in retail names and some of the momentum guys buying calls and some of the names ahead of earnings reports that again kind of show the same thing, is that nobody's going into the mall. So anyway, have a great night. See you guys back bright and early Friday morning in the Tribeca Trade Room. Thanks very much. Have a great night.